welcome, thanks for watching, and just a quick look at the markets for the week ahead. With non-farm payroll, i.e. monthly jobs in the US on Friday, and the ECB calling a rate decision on Thursday. So this is Monday morning, 4th of March, and we've already got our 25 pips in the scalper school room. I was confirmed here at 9:05 this morning. I'll short the DAX if that is confirmed. Short if we close under the 638, we did, and we got to date at least there's 40 plus pips on the table. There was an initial 25 pip plus move from the call, and then we did a short retracement, and we are still drifting lower. So that's something you can get out. This is one of the key benefits of Scalper School. We've got the trading room for Tuesday, Wednesday, Thursday for the European session on those 3 mornings, and the US session those 3 afternoons. And then throughout the week the Skype room is active, and then on Monday night we have the scan session with training as well, where we look at the week behind us and then we look at the week ahead and look for key levels that we can trade this. And what you're seeing up here as well is the weekend videos. Bulls are in control, levels to watch. So, and that is reiterated once we get Monday out of the way, 7 o'clock on Monday evening, we can sort out what we're looking for. So I thought I'd look at, just pull up a chart and just talk about what these markets are doing these days. This is the DAX on the 2-hour, and it's not I've not pulled this chart up because I like 2-hour charts. I just pulled any old chart up just to sort of make the point that you've got the markets looking okay up here, pulling up, and then just reverses, just turns on a pin, drips, it doesn't drip, it drops for all these hours, and then just again turns on a pin. So what are these markets doing? Well, there are key levels now that the algorithms look for, and that's why Scalper School works so well, because I've pinpointed what their algorithms use, and so we can get in ahead of these markets on reversals here and here. Obviously it's tougher for everyone when things just drift sideways. We've got mechanisms for looking for sideways markets, and then of course we come out of that, get a little push to the upside, spend another long consolidation period here. The drop then creates this little move to the upside. So all these key levels are pinpointed in some way or other through the Scalper School system. Like I said, if we get into a lazy sideways action, then we can compensate for that. So markets move sideways 80% of the time. That's not a figure I've plucked out of the air. That is fact. And our Scalper School trading system is 77% success rate. That is fact, because that is verified by a completely independent 9-month study using data going right the way through a 9-month period. Okay, so on the 16th of March, Saturday, we have a 4-hour program, and that gets you into the trading room, and that gets you into our weekly 5-day-a-week Skype chat room and all the other facilities that we offer as well. So let's just look at the big picture then. So the big picture is this DAX eking up. It's broken up through a key level of resistance, and we have some key levels up here at 12,000. We've got a pivot level there at 11,880, but in the meantime we are just getting the occasional sort of push up. Big push up on Friday the 4th, big push up on the 18th, reasonable push up on the 2nd, what was that, the 5th of Feb, 15th of Feb, and now we had a good period of consolidating last week, and then Friday was a good push up in the DAX. It wasn't for the Dow. The Dow was selling in the cash session. All right, so that's where the markets are. So what can we expect? Let's look at the weekly. You can see we've only had 2 lower closes in the DAX for 2019. 3 higher closes in the previous last 3 weeks, and you can see the support level I've got marked here at 11.5. 11.5 being such a key number. We're currently 11,600. So only 100 pips off of this. So if we dip into potentially even under 11,500 and hold, then maybe we can make a march up for this zone that I've got marked here, up here for 12,000. Otherwise, stay tuned, because if we do start to see some significant selling, then I will try and give you the heads up for that. The Dow. Now the Dow has had its first lower close this week in 2019 last week. So, big march to the upside, some reasonable size, pretty decent sized bars in some of those weeklies, which we capitalised on. The last couple of weeks has been stickier, been very much more narrow range as we come into this sell zone from October, the first week in October. So with non-farm payroll, we are hung in the balance. We are hanging around this 26,000, which is currently 26,100. I'm looking for the potential for this to see some retracements after this big push up here now. With I don't want to call any significant short at this stage, but I'm certainly getting ready to short as this has come stuck within that funnel pattern, and then we're starting to fall out of it. Now the key thing for me is this sell signal here on Monday the 25th, so 7 days ago. We've not broken out of that range, so that puts us at a vulnerable level at 876, which is not that far off where we are now. So if we start closing under there, then I would expect this to really start to retrace, and then perhaps get some better moves in the back end of the month. Okay, but at the moment we're very vulnerable. All the time we're outside of this funnel pattern. These funnel patterns are very powerful. These are a few examples of what happened before. So we drifted up here in October, plummeted on Wednesday 10th, spent a long period pushing up in November, and then we get these two patterns, two very, very similar patterns coming out of here, and then eventually an aggressive turnaround at the very end of 2018. So we're vulnerable. This is a huge sell zone up here. This is a big problem for the Dow, and we are right in the mid. We're just peeking into that problem, and potentially coming out as around the 26,000 mark. So I am shorting. I was shorting this morning, and you can see there's my 2-hour chart. So we are really struggling up here. We've gapped up here this time last week, and spent the rest of the week drifting lower. I've gapped up again. Market's not happy up here, so that's drifting lower. So 26,055 was Friday's close, so that's going to be the marker. Okay, so stay tuned. Let's have a quick look at the pound. So this is a 2-hour chart. Back to the 2-hour chart here, and you can see 133.50 was tough up there. We gapped up, and just because we gap up doesn't mean to say we're going to fill the gap and continue upwards. That was the traditional sort of method of gaps. In this day and age, just look for key levels of support and resistance, because we've seen, I think it was this time last year, we had a big gap up in the Dow. It closed and just continued lower. So just because we gap up, don't come into these markets expect the gap to be filled and then it continue higher, because if we come out of the other side of this at 31.70, then I think this is toast and it's had it. Okay, you can see how important this area was back down here in January this year, and we fell out of there, came all the way back down to 127. Okay, so let's see what unfolds. Let's see where we are at the beginning of the end of today, for example. Sometimes I always find Mondays can be good barometers for the appetite for risks. So let's see what that is, and I will update you on Wednesday. Enjoy your week and talk to you then.